What is good, my peanut butters? Welcome to today's lesson. We have draw on liquidity and daily bias. It goes hand in hand. Today, I'm going to be covering draw on liquidity and daily bias. This is by far my most requested video to this date. I'm going to be doing this at least once a week. I want to be doing some sort of educational video every Friday, maybe every Saturday. We'll see. So if you have a video that you would like to see me make, please let me know in the feedbacks tab, okay? I am constantly looking to give you guys more sauce because there's times where I feel like I'm not giving you guys enough information and education. So I do want to be, helping you guys as much as possible. So please let me know, okay? That being said, let's get into this. Why is this my most requested video to this date? Why? Well, it is the hardest concept to grasp as a trader, okay? Draw on liquidity. Oh, wait, fuck. Guys, we're making a draw on liquidity video. Okay, I forgot to do that. But, oh, fuck, that was horrible. Anyways, this is my most requested video because it is the hardest concept to grasp as a trader, right? Finding narrative, finding where the market is actually going to go towards. You can talk about entry models all day. You can learn an entry model in 20 minutes. Your mechanical model, my discretionary model, you can learn that really easily, right? But finding out exactly where the market is drawing towards actually will help you tremendously, and it is a necessary aspect of your trading when you need to be applying these entry models. You can't just apply an entry model without draw on liquidity, right? You will be completely lost, right? Which is why I think it's necessary for me to be making this video. That being said, and to preface this video, this draw on liquidity you will not get in 20 minutes and however long this video is going to be. You're not going to be getting it in just this video, okay? It's a lot of screen time. It's a lot of watching the markets, right? In comparison to an entry model, okay? So I just wanted to say that. I do want to make this as simple as possible, okay? I am pretty excited to make this video because I do think that there's a lot of shit on the internet of people, trying to overcomplicate it when it really is pretty simple, okay? So let's get into this. There's a bird outside of my window that keeps yapping. All right, so I have three sections of this video that I want to go over. Number one is just a very simple rundown of how the market moves. And then second, I want to go over actually how to find your daily bias, and then we'll go over some examples, okay? So starting off, we all watched ICT's mentorship, right? So there shouldn't be any sort of confusion here, but let's go into this. Let's give a little refresher for everyone that hasn't. Why does the market move? Number one, to rebalance inefficiencies, right? So we rebalance inefficiencies. What are inefficiencies? Unfilled fair value gaps, right? Or data highs and data lows, right? Those are unfilled orders in the market, right? Number two, to rebalance equilibrium. Why do we want to rebalance equilibrium? People want to get in at certain price points depending on what order flow we are trading in, right? So, for example, PB premium, right? You don't want to be paying $75 a month for PB premium. Who wants to pay that, right? You want to be getting in at $50 when we drop that discount code for, Hog Day sale or whatever holiday is going on at the time. I think we got Labor Day tomorrow or Monday, right? So, boom, Labor Day sale. You want to be getting in during those times, right? At that discount. You don't want to be getting in at a super high $75 a month. That's a horrible financial decision, right? So if we're in bullish order flow, we want to be getting in at a discount of that leg. So the market will trade towards that to fill those orders, right? And finally, we seek liquidity, and we are seeking liquidity. Again, we are taking out sell stops and buy stops to then trade towards the intended draw on liquidity. Okay, very simple, but this is necessary when you are going over your daily bias and draw on liquidity. Okay, so we must remember this constantly. Have this in the back of your head. Next up, let's go over how do you find your daily bias / draw on liquidity. Oh my god. Okay. How do you actually find your daily bias and draw on liquidity? Well, hello? Okay, anyways, we'll just do this. Number one, see if we are delivering from sell side for buy side. And number 2, see if we are respecting or disrespecting PD arrays. Okay. Oh my God, Blake, I have no idea what's going on. Calm down, little Timmy. Let me show you. Okay. So let's go over this in a little chart form. Okay. Let's say, for example, we have just swept sell side liquidity, right? We just swept sell side liquidity. And now we have a bullish PD array. Okay. If we are going to be bullish, I would like to see this get respected, right? This got disrespected, right? There was probably some sort of bearish PD array here. This got disrespected. Nice. So now I want to see this bullish breaker block, this unicorn model, right? This is a breaker block. Let's say we have a fair value gap here in 1. I would like to see this get respected and then form some lower time frame structure of bearish PD arrays getting disrespected for then the next round liquidity to be this recent high and potentially the external high that we're trading towards, okay? Now for a bearish example, let's say we are we just swept buy side liquidity, and same thing here. And let's say here we have some sort of fair value gap. I would like to see this fair value gap get traded through to then have my drawn liquidity be this recent low and potentially these lows lower, right? And have this bearish PD array here get respected. All right. So that is that. Seems really easy, right? Very hard to do every single day, right? But let's go into now some examples. I want to show you guys some examples in a chart form, okay? I want you guys to be always looking back at my at the daily buys. If you guys are struggling with daily buys and drawing liquidity again, look at the daily buys and just look at what I'm saying, okay? So here for today, bullish buys coming in the morning. We swept 4-hour liquidity and we're delivering from this 4-hour BISI, inverting this bearish gap. Respecting bullish, disrespecting bearish, all right? Targets being previous day high, I'm essentially equal highs. Not expecting good action, whatever. Okay, what are we doing here? We've just swept sell side liquidity, okay? So we are delivering from sell side, right? Right, delivering from sell side. And we are disrespecting bearish PD arrays, meaning what? The next recent high is most likely this high and these equal highs here. All right. So let's use everything here. Okay. So first off, why is the market moving? In this example, we're moving to seek liquidity, right? To seek this liquidity here. And then here we are delivering from sell side and we're disrespecting bearish PD arrays. Okay. And what happens is we traded and we delivered towards that buy side liquidity and towards that what's it called, order block right there. Okay, that's example number 1. Let's go into example number 2. Bullish buys coming in the morning. We have an SMT with previous day low, and I'm looking to see us trading to equilibrium of the hourly range up into this 15-minute SIBI. From there, that gap is my condition. If violated and there's displacement through OTE of the range, I'll look to take longs towards London highs. If respected and we form lower time frame confirmation, I'll look to take shorts targeting the recent low. Okay, so a lot of jibber jabber shit said there. I just said jibber jabber. Yes, please don't flame me. Right, we have an SMT at this low, right? So we are delivering from sell side liquidity, right? ES took out this low, right? So what are we doing? We're delivering from sell side. Why is the market moving, right? The market is moving here to rebalance inefficiencies and to rebalance equilibrium, right? So 2 and 1 here. And if this PD right here, and again, guys, you have to be constantly setting yourself conditions, all right? I see all the time people going into given trading sessions and not setting themselves conditions. You have to be setting yourself conditions or else you are going to be completely lost, all right? So here, this is going to be a condition, right? So right now I'm bullish. Until we get to here, though, I'm not fully, completely bullish because we hit this PD rate. I want to see this PD rate get disrespected, turn this bearish fair value gap inverted to then confirm that this SMT is valid and that these aren't just relative equal lows and that this SMT is valid, and then we can trade towards London highs, okay? So what do? We first traded towards equilibrium. Beautiful. We traded towards the equilibrium in that leg. Then we inverted this gap, traded back towards it, and we delivered towards London highs, right? We disrespected bearish PD rays to then trade towards liquidity, okay? So here, we are rebalance. We did everything here, right? We rebalanced inefficiencies, that unfilled 15-minute fair value gap, rebalanced equilibrium, and we seeked out that liquidity. If all of these are aligning most of the time, if everything here aligns, guys, you are going to be having an A+ model 10 out of 10 times if all of this you are aligning with. Your drawn liquidity has to be aligned with your overall entry model, and you will have all the time an A+ model, okay? And then from here, we are delivering from sell side, and we are disrespecting bearish PD rays, okay? Let's go into this PM example, okay? Bullish bias coming into PM. We just hopped in this hourly order block and we swept AM lows. I'm looking to see us rebalance towards unfilled 15-minute, 5-minute, potentially equal highs. For example, this example here, I am using the 1 minute. I'm using every time frame here. Okay, so it's not just you use the highest time frame, 4 hour, 50-minute, and that's it, right? You have to be using all the time frames, even the 1 minute. There's times where, guys, I will be bullish just because we have like 5 sets of really perfect equal highs that we just made. We have really perfect equal highs, and okay, I am going to be bullish towards that. And you can't see that on the 15-minute and hourly, right? But there's times where, we'll have a super clear pre-market low resistance liquidity, and I know that's getting ran at open. So there's times like that, okay, where my bias will be dependent on, which is why there's a lot of, again, this is a video that's hard for me to make because it's hard for me to simplify it so much because, again, it's not you just do this and that's it, right? But this is definitely... I'm hoping you guys are seeing the pattern here of how I find my daily bias, right? So again, sorry, just for no reason there, but bullish bias, we just tapped into this hourly order block, okay? So we are respecting bullish PD rays and we are delivering from sell side liquidity again, right? Delivering from time-based liquidity, AM lows, and I'm looking to see us rebalance towards unfilled 15-minute, 5-minute, and potentially equal highs, right? So example here, what are we doing? We are delivering from sell side. We are respecting bullish PD rays. And why is the market moving here? To rebalance inefficiencies and to seek liquidity, being these equal highs, and rebalance inefficiencies being this 15-minute and 5-minute fair value gap, okay? And then voila. There you go, okay? Again, hopefully you guys are seeing the pattern here. This is my final example. This is, I'm not covering this in this video, guys, daily profiles and whatnot. But there's times where we'll have, I'll just cover this really quickly, but like seek and destroy conditions, right? So daily bias can be dependent on seek and destroy conditions or daily profiles. For example, we'll have a continuation model. If NQ is trending, if we have Asian lows, Asian session and London session having bullish order flow, we'll most likely have bullish order flow in AM session, right? But for example, let's say we have London session taking out Asian highs and Asian lows. That is called seek and destroy, meaning we will most likely trade back towards London highs and London lows, and it will be much choppier price action where we'll just be constantly seeking out liquidity. So this market is moving to just seek liquidity, all right, if we have seek and destroy conditions. But I do think that this example I should show you guys, okay? So expect seek and destroy conditions today. This 15-minute SIBI is my condition, right? If displaced and traded through, equal highs and London highs are the targets. If respected, London lows are the targets. All right, so if we respect this at open, we should see London lows. If we disrespect this, we should see these equal highs. Even better, if we take these London lows, then disrespect this, then we should see these equal highs, right? So let's see what happened here. What do we do? At open, we trade towards this. We respected it. We traded back towards London lows. Then afterwards, we disrespected this right here. We disrespected this. And then we went straight towards London highs, right? So what were we doing here? We were delivering from where? Buy side, right? Right here, we were delivering from buy side liquidity. We just swept this high inside of a fair value gap. We then disrespected bullish PD arrays, creating a very nice bearish PD array, bearish model here, which was this breaker block, right? Traded back towards this order block as well. Unicorn, respected this at open. We delivered towards this London lows. Then at this point, this is my new condition, right? We just swept sell side. So we are delivering now from sell side liquidity. Now I want to see if we are respecting or disrespecting PD arrays. Okay. Then we disrespected this PD array, and then we delivered towards this buy side here. Okay. So here we are just moving. The market is just moving to seek liquidity, right? We're just targeting London lows and we're targeting London highs. The seek and destroy conditions, you will see that. All right. But that was that. All right. Hopefully you guys, that cleared up some things for you, and you will start looking at the market in this way. All right. Screenshot this, do what you want, but constantly have this in your head when you are trying to find your daily buys and you're on liquidity. And yeah, that's that video. If you guys have any questions, feel free to DM me. I am constantly answering DMs. We are running our giveaway this month. If you use code PB Trading, or this week, sorry. If you use code PB Trading for My Funded Futures, I'm going to be giving away 2 My Funded Futures 50K accounts, 2 one-of-one 25 or 50K accounts, and then 2 FX Replay 1-month accounts. So yeah, you'll have a free month with FX Replay, and yeah, overall, that's that. All right. Hopefully you guys enjoy this video, and I'll see you guys for Sunday night backtesting. Peace out.